Hi, I'm Wei Min. I'm a Manhattan condo broker, and this is our April 2022 market update. The opening slide here are some examples of our clients' deals. The one on the left here is a 3-bedroom, and it was our 3-bedroom strategy because post-COVID people wanted more space. So I advised my client on getting a large 3-bedroom. And this rented out in 1 week. The location was amazing. It's across the street from Whole Foods, and this is actually the Goldman Sachs headquarters. And there is a lot of open space for the view. The one in the middle here is the view of one of our clients' apartments. View is amazing because it provides a wow factor. You look out to Washington Market Park, and on Greenwich Street here there is a farmers market during the weekends. You see a lot of sky, you see a lot of nice Tribeca architecture, the Jenga building here. So views are definitely important. The one on the right here is a split 2-bedroom, which means that the bedrooms are on either side of the living room. And it has great views. It looks out to the river, and there's a lot of nice open space. So those are just some examples of our clients' investments. Let's move on to the next slide. This is the historical price trend, price per square foot of Manhattan condos. You notice that it goes up for about 7 years. It comes down when there's a recession. Back in 2009 there was a recession, and from 2017 to 19, and then it stretched out to 2020. So there was a downturn, but otherwise it goes up. So right now we are at the beginning stages of the next up wave. Notice that these bars, I purposely broke it down by quarter. So the other bars are all by year, but the last 5 bars are by quarter. So Q1 of 2021, this reflects the COVID deals that were signed in late 2020. That's why it went down. And then starting 2021, and in the bars you can see starting the second quarter onwards, it's been going up. Why? It's because there was pent-up demand. The interest rates are at historical lows. They've been going up last year and now, but they are still at historical lows. In 1989 it was 16% for the 30-year mortgage, and right now it's probably at around 4 to 4.5% for the 30-year mortgage. So we expect the prices to keep going up for roughly the next 7 years or so, and we are right now maybe at the second year if you count 2021 as the beginning year of the upwave. Now we're at 2022, so 1 year, and we probably have 6 or 7 more years to go. This is the Q1 2022 summary, and the key points are, if you look at average price per square foot for a condo, the average price per square foot for a condo 1992, it went up by 16% versus last year, and it went up slightly versus the prior quarter. But look at the sales volume here, 1647, this is for the quarter, and it went up by 52% versus last year. And the supply is at 6.2 months, which is down 35% versus last year. So the market is very robust. This table here is for new developments, and new developments are more expensive. On a price per square foot basis, it's about 2,300, which is 6.6% higher than last year, and the sales volume is 90% higher than a year ago. So the Manhattan market is definitely booming. It's coming back, and history has shown us that after a pandemic, usually the market does really well. If you look back at Europe during the bubonic plague, after that Europe experienced a renaissance. So right now the real estate market for residential is doing very well, but for commercial it's not, because a lot of retailers are closing down or have closed down. The reason is that people are buying from Amazon. So it is very tough to be in commercial real estate right now, but residential real estate is totally the opposite. It's doing very well. This is a chart that shows whether we are in the seller's market, which is here, a neutral market, which is the middle, or a buyer's market. So you notice that the bottom of the COVID period was in July of 2020, and that was when it was the most buyer's market. and since 2021 it has picked up, and right now it's been in a seller's market. This is now, and this is during the boom years. When it's in the top section, it's a seller's market, and we're in a seller's market right now. Focus on larger apartments as people want more space post-COVID. What does that mean? That means if you can get a 2-bedroom as opposed to a 1-bedroom, get a 2-bedroom. If you can get a 3-bedroom, get a 3-bedroom. Because people want more space. And if you look at the chart here, the 2 million plus, which basically refers to the 2 million 2-bedroom and above sizes, they are outperforming relative to the sub $2 million properties, which are the studios and the 1-bedrooms. This is a historical trend of the supply. The supply is denoted by the blue line, and the pending sales, which is denoted by the red line. So when you see the spread, when it's a very tight spread, it's a bull market. When it's a large spread, it's a weak market. So notice that in third quarter of 2020, the spread was the largest. That was when the market was weakest, and right now the spread is very tight, and it's another indication of us being in a strong bull market. This chart here is courtesy of Urban Dicks, and it shows the supply, and supply is very low right now. The red line here is the historical average, and right now we are below the historical average. And going back to 2020, we had a high here, roughly May to July of 2020. That was when the market was weakest from the pandemic period. And since 2021, the market has picked up tremendously. This is a chart that looks at the pending sales. Pending sales refers to contracts in pipeline waiting to close, and we are higher than historical average. The red line is the historical average, and the bottom was in 2020 here, and right now we are way higher than the historical average. So one of the challenges of the market right now is that supply is very low, and we have a lot of buyers, but there's not enough property. Buyers are trying to lock in the still historically low interest rates, and the buyers just want to be able to see more property. That's a brief bio of myself. Thank you for watching.